Hi, my name is David Buckland, the CEO at Montgomery, and welcome to our first video insight for 2023. Over the past year, each of the 5 central banks of New Zealand, the US, the UK, Canada and Australia tightened their official cash rates on around 8 separate occasions to an average of nearly 4% from historical low levels a year ago of around about 0. This came on the heel of inflationary expectations hitting 40-year highs for many economies, the war in the Ukraine seeing the price for gas, oil, food, fuel and fertiliser spike, and a severe sell-off in the bond market where US 10-year Treasury bonds jumped from around 0.5% in mid-2020 to more recently breaching 4%. Share markets mostly reacted in a negative fashion, particularly with longer dated growth stocks, as observed by the 33% decline in the US tech heavy NASDAQ over the calendar 2022 year. As investors, however, we can't drive the car with our eyes on the rear-view mirror, even in the current murky conditions. The consensus view is that economies are slowing and inflationary expectations are on the decline. Nevertheless, 1 or 2 more increases in central banks' official cash rates remain on the cards. The mood is guarded. Buyers are generally hesitant. Risk aversion is rising. Startup businesses and loss-making companies are experiencing much tougher lending conditions. Companies in distress are increasing, and the expectations for recessionary conditions in 2023 have become the consensus view. With the expectation that a lot of this negative news is understood by the market, many share markets recorded a very nice rally in recent months. For example, over the December 2022 quarter, the Australian market and the global market in Australian dollars were up by more than 9% and 4% respectively. And despite all the doom and gloom surrounding the Australian residential property prices, especially with the wave of fixed rate mortgages switching to the variable rate, it seems we may benefit from China's abandonment of the stringent zero COVID policy and the reopening of its economy. Like the global financial crisis in 2008 and 2009, Australia may again experience the pull-up effect from China, and many of our primary industries continue to enjoy very solid commodity prices. Those companies with highly reliable cash flow and demonstrated resilience were likely to be the winners in an environment of slower economic growth. And for those requiring monthly income, the Aura High Yield SME Fund, which is designed for wholesale investors with a minimum initial investment of $100,000, is worth considering. In the 65 months since inception, 1 August 2017 to December 2022, it has paid out a monthly income ranging from 0.6% to 0.93% and an average of 0.77%. For the 12 months to December 2022, the annual return, assuming reinvestment of income, was 8.31% after expenses. Montgomery also assisted in the launch of the Aura Core Income Fund, which was launched in October 2022. It is designed for retail investors with a minimum initial investment of $25,000. Its objective is to beat the RBA cash rate by 3.5% to 5.5% per annum on a consistent basis. That's all I have time for this week. Thank you for your support, and please continue to follow us on Facebook and Twitter.